Hey, good morning, everyone. I'm going to tip my hat to Linda Bradford Raschke, who's done more for trading, futures trading, than anyone, I think, walking the planet Earth, especially her contribution for improving the Keltner channel, which is a volatility-based envelope set around a price. I trade mainly this type of concept, standard deviations, volatility, and ATR. Linda changed the 10-day SMA over the high-low close divided by 3 into what we're using currently with modifying an ATR. And when I put that together with my volatility um, filter, as well as tricking out some candles on my entry chart, here's the 10-year note, which we'll be looking at. You can really come in here and hit the trend up or down and just wait for that one entry. Trading is waiting. But you can see here from an example about 2005, I think my data goes back to. Yeah, not quite. Yeah, April of 2005, May. The market is very technical. Now I have my own little settings, ATR settings that I like to tweak in the Keltner bands, but I tweak them just like I do my volatility bands on my trend. And when you can find the pattern where price comes in and ping pongs between these bands and look for entries, reversal opportunities at the band, outer bands, here the yellow one or the red one. The white one is a faster band leading, but we'll go, I have 3 different bands that I use with 3 different settings, and use this in conjunction with momentum. So, here's excellent example of looking for divergence, lower low, much higher low momentum, and you're at an outer band. And this is on the weekly chart. So price has really never gotten below this point, 67, since 2005. So it has gone up and up and up and up and up. That's because of the financial crisis. So now we've started to flatline. May of 13, forward. Let me put a trend line on that. And you can see that's acting as resistance. So here is an outer band, and you wait for the reversal, and you know where you're trying to get to. And there it goes. And then it turns back around, which it did here on the outer band. So where is it looking to go to? So you get a trade plan in mind. You see where you are relative to the bands. Look at the confluence of both of these bands right here on this resistance line. So no doubt that resistance line is going to get tested again. We're coming into down volatility. So do you wait for a weekly candle to close or a daily like it did here and came back down? Again, at a confluence of 2 bands with the volatility level. So that's pretty strong signal right here. So I would put a stop above that band and take her down. But getting there intraday is what we want to do. So I have my prime locations, you know, buy low, sell high. And so you just wait for the candle close because that locks in the momentum instead of trying to get in too early and it'll continue backing up on you. Just wait for a candle close and then try to get in. Of course, day traders, patience is not one of their virtues. So know where you are relative to the opportunity. Get a game plan going. And what I like to do is take trades on the lower time frame to lock them in with my entry templates and take advantage of directional moves one way or another. 10-year note is like one of the best ones to trade according to my tick chart. It still is like the second best instrument. So make sure to check out Keltner Channel's stock charts and learn about their calculations, how to trade them, how to use the ATR, how to change the ATR to get different um, patterns of standard deviations so you can play with them just like you can your volatility indicators and your volatility candles and take advantage of getting in at the right time and knowing the right direction together with your other tools. So thank you so much.